Hello guys, hope you're all having a great weekend and hope you're all ready to smash the last week of the quarter. This will be a quick breakdown of what I'm seeing or expecting for this week. We'll just be going over GBPUSD, GBPAUD and gold. Since this is the last week of the quarter, there might be a lot of big moves ahead of this week. So let's check out what should we expect. Looking over at GBPUSD, it's an unusual case to have two weekly candles as an inside bar. So this means that the price is being held inside this first weekly candle of the month of March. What does this mean? Going over the weekly, we can see that the price is still holding above the EMA, okay? And just to give a little bit of context, over here on the left, this is pre-Brexit levels, okay? So we tapped there once at the end of February, and since this is pre-Brexit levels and price is just like reaching it for the first time, we are seeing a little bit of a slowdown on the weekly, okay? Taking also in account that the GDP for the UK slowed down, shrank a bit, about 2.9%, we could expect an overall retrace for the pound. Also taking in account that the dollar, the bond yield is outperforming, reaching 2%, as we talked about at the beginning of the month of March, and as the bond's expiry date took off last week, there's a lot of money being put back into the market. So this means that the dollar should expect some strength. So looking over here, we can see that these last two weekly candles are trapped inside the first weekly candle of the month of March. Going into the daily, we can clearly see how the last week is holding inside this, although it's pointing a bit bearish, and we did open, the market's already open for half an hour. We do see a gap opening down. So once we see this happening, it's normal to expect some sort of consolidation, and after this consolidation we either break for a retest going down, or price will just stay inside this zone, taking shorts and longs until it decides which path to take. Okay, since we are on the weekly, we can tell that this is a bit of a slowdown. Like, we know once price is expanding, one of the best indicators for reversals is when we see a daily slowdown, and we are seeing it on the daily on GU. So what can we expect? Right now, I would wait for the price to break this box, either up or down. I'm expecting a down move. Since last week, beginning of last week, I do have 1.34 in mind for a retracement for GU at long term, which is this zone over here, which was the previous high before we took it to reach pre-Brexit levels. So I could see a retracement back into this area, back into 135 psychological level, around this zone. So since this is two weekly candles being trapped as an inside bar, price is just consolidating and expecting a bigger move ahead, maybe into next quarter. So we can really expect big moves into this week in preparation for the next month. Not much to see here on GU. It's just to have a clear perspective on what can happen. But my main focus these 2 weeks would be GBPAUD and gold. So first, looking at GBPAUD, I don't want to keep this too extended. Looking at GBPAUD on the weekly, it's a bit messy. Like since COVID hit last year, we had a huge dive, 2000 pips to more than 2000 pips to 2500 pips. And this weekly, it's really messy. Like, looking over here to the left, we don't know if it's on a bullish consolidation or a bearish. Price on the weekly is just giving a lot of wicks. So it's a bit messy, but breaking it down a bit, if we take the low after this rally down, which was already hit twice, and this body candle pushed above, and we haven't seen this level again. Price just broke up, came here to retest. We had a huge push above 180, and this was one of the first times we came. It was the first time we came above 180 this year, but instantly on the next week, price pushed back down. We did add a retrace all the way down from this candle. Price still closed above, and on the next week we had another wick to 180, completely rejected, and on this last week that we have, another wick to 180.25, which was again rejected. So what could I expect from this pair? As we look into the daily, after marking this high and low of the range, and where the impulse happened on the weekly, which was this candle that marked this range, we have had 3 bearish candles that aren't supporting the 180 level. Basically, looking over the daily, we can clearly see how price is reacting to the 180 zone, psychological level. So we have had 1 drive on the beginning of February, 2 drives rejected, 3 drives at mid-February, rejected again. We had this big impulse above 180, the first daily candle that closed above 180. The day after, completely pushed down. Second time we came and closed above, again closed below the day after. And this zone has just been filled with wicks. Wick, 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 rejection, wick, wick, rejection, wick, 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 wick. So this, in my honest opinion, we are still on a downtrend. So we had this huge bearish move since Corona last year, beginning of this crisis, and price is just showing us that it doesn't want to break 180. So we could literally expect it to just come back down, make a little retracement to 177.5, 500, around that zone. We are still inside this range. We might still come again to retest 180, and only after taking shorters out, pushing price down. And this will all align also with our gold bias. So looking over on the 4-hour, we can see how price is reacting on a closer price action. Just going back here on the daily again, something that I missed. I'm seeing how this inside bar is playing out. Price is slowing down, but we do see how many wicks there are and how many candles it has rejected on the 180. So taking into account the last 3 days, since mid last week, if we take this candle over here, we can see how these 2 candles are trapped inside. So what can we expect from this? Since we are also expecting a devaluation of the pound due to COVID lockdowns and the GDP, as I mentioned before, the vaccination now taking some hits, we do see this slight downtrend, okay, slight trend line that on the 1 hour we can clearly mark up. Wait a second. We can clearly see this trend line being formed on the 1 hour, and we are still creating lower highs with lower lows following. So it would be in our best interest to find a short from this level. Price might still come above just to take people out, but we do expect a rejection of this 786. Also third hit on this trend line, bringing price back into the weekly lows from last week, and perhaps diving a bit further, as we mentioned, to 77,500 all the way to 77, which is the push that created all this range from bottom to high. We rejected it twice. Could be wise to expect this to happen. Moving into, there's not much still to say about this because it's still Sunday night. We just need to mark up our areas in order to have a clear understanding of where price can go, since we are on the last week of the month. And we see how price has been trapped around this range, tapped here once after breaking, went all the way up, tapped it twice. So looking at this, last week we might still come a bit above the weekly high all the way to the weekly low. 786 is aligning on this zone, waiting for that third touch on the trend line. We might expect this to just consolidate a bit over Monday, preparing the price for a midweek reversal perhaps. So we will keep an eye on it. And moving on to gold. Gold, there's a lot of potential on gold. Let me clear this. I'll clear all of this. Okay, looking at gold, we see how it is clearly on a downtrend. We went all the way up here to 2075 back in August last year, and since then we're just taking a dive as the economy starts to recover from this pandemic. So looking closely at the weeklies, we can see how price just tapped into this 1675. We had these three bearish candles and price stopped around 16,787. It was the previous support before the push all the way up to 2075 level. So taking this into account, we will mark the weekly highs of the range as well that we broke. We had this week over here on the weekly. This week completely rejected the MA, pushed down. Next week tapped into it, pushed even further, and both these body candles closed at the 1700 level, psychological level. So although we are on a bearish run, we see how price is reacting to this round level, and this weekly just tapped out all the buyers on this previous week, took them out, pushed price above, and we could expect now some sort of slowdown in a way into this 1760 level, into this 1785 level, or even 1775 round level. As you know, gold moves from round numbers to round numbers. So taking all these weekly candles and marking up their weekly highs and these taps into the lows, we can see how this weekly price action is giving us a hint of what we can expect the price to do. Okay, so after this break of these two important levels, and after price took buyers of this previous week, last week price didn't even came to retest this level. Price just took the previous weekly high and we closed above it. So this means we are into this range over here. So going into the daily, we can see how price is reacting to this, although we can still clearly see how in a downtrend we are. Okay, price is just wanting to take as many shorters out of the game before we reach lower levels. As the economy, as I said, is recovering, price tends to flee from safe havens, and as the dollar is is strengthening and being more firm over time with the bond yield, we can see a further downfall on gold. But before that happens, we first need to take everyone out of the game. For example, we have this level over here, which was a huge push on gold after this huge fall. This was what caused us to bring the price all the way up back here before coming to new lows. So I wouldn't reject the hypothesis of price coming into these highs, taking everyone out, and only then reaching back to these lows. So this is 1,000 pip range. This is a huge opportunity for a really good swing trade into April. Okay. On the 4 hour, on the daily, price is still above the moving average, holding with this wicks. On the 4 hour, we also can clearly see that we are respecting this counter trend line as we are on the downtrend. It's normal that we are creating a counter trend line. Just for price to retrace a bit, take some time to breathe, and now you can clearly see how these levels align perfectly with this tap, broke, retest, and we haven't come back here again to retest it. So before moving further down, we need to see that first break of the highs, take everyone out, and then we will see a break of structure. Okay, only after this happens, and we will of course be looking over this zone, all this area, for further price action to tell us when to go short. But there's still long opportunities over here. Of course, we are at 1744.45. I mean, there's still 150 pips to run until 1760. Okay, just take into account that gold really respects its levels, and since it's the last week of the month, price might move really rapidly. Okay, so take that into consideration. Don't jump into trades thinking that you'll make a lot of ROI. Just be humble, wait for the setup to create itself, wait for the highs to be taken, and only then act upon what we are seeing and expecting. Okay, you see how this bull push was taken out completely, taking the lows and now restructuring it back up again. This could be considered a break of structure, although price took the trend line, came back above the support, and now we are reaching higher as expected on the weekly. So we create a nice slowdown on the daily and on the weekly, wicking perhaps the 1775 area, bringing the price back down into the range, and then rolling over to our destination. So there's not much else to see over here. I would recommend you looking over into this level, expecting that break, and only then acting upon price action that will be presented. I would expect a middle of the week retracement, so we might see a nice push over Monday and Tuesday into these highs, taking everyone out, and then rolling over after Wednesday into Friday to the end of the month. So that would be my overall bias for this week. There's still a lot of PA to continue to give us more confirmation into what we are expecting from these pairs. I won't dive into the dollar. I mean, I could just to take a look into the bond yield. You saw how in the beginning of the month of March we were around this level, 1.40. I did tell everyone that price wanted to come to the 2% level, and it's just rallying, guys. Price is just, as it expired last week, the bonds, I think it's around 500 million bonds are being dropped back into the market as the expiry dates worn off. So that's why we are seeing a huge push on the dollar. Also the DXY is holding pretty strong. I told there might be, we wanted this push into the 92 level, and we saw a bit of a slowdown last week, but we do expect it to continue up following the bond yield. So this would all align with our bias for gold taking these highs and then rolling over to the downside. Okay, guys, I will keep you updated for the rest of the week. This is a short video just to give you a bit of an insight of what we are expecting going into this week. So trade safe, don't over leverage, don't expect, just a warning, don't be expecting to hit the lottery every time you enter a trade, okay? Plan your trades. If you have this bias of rolling over on gold, for example, don't be trying to look out for the perfect entry to go all in, okay? If you do see this rollover happening, just scale down your entries, because price will be taking everyone out of the game before rolling over. So it's unwise for you to enter over here with the stop loss above, with 2%, 1%, whatever it is, just to get taken out, because you know that will happen. And for then price to move back up to these highs and you're taken out for the week, you won't be looking more into gold, and only then it will reverse and you'll be crying because you missed your entry or missed the opportunity. So take attention to your setups. If you need, just break down your lot size per trade by 3, for example, and enter 30% on the resistance level on the first one. If price does go against you, just enter another 30% on the next level. And while price is doing its thing, taking everyone out of the market, you're controlling your entries, you're controlling your positions, expecting price to just roll down to your side, and once it does, you can clear all this 1000 pip range with your stop losses at break-even and without putting your capital at risk. Okay, guys, that will be all for me for this week. If I do see anything else, I'll keep you guys updated. So take care, trade safe, and have a great week.